Samit now joining us with a heads up of what we can expect from the conglomerate.
Well, in the second quarter of FY23, if you see Reliance Industries numbers are expected to be muted, the revenues would be flat, EBITDA would decline by around 15%, and this is expected to be the biggest decline for Reliance Industries in the last 9 quarters. Margins are expected to come in at 15%, while net profit is expected to be lower by around 13%. Segment-wise, if you see, retail segment is expected to grow by around 8 to 10%. The O2C segment is expected to see the biggest hit, a decline of around 37% on the EBITDA front, while the oil and gas segment is expected to be stable sequential basis. Now, the O2C segment is expected to be impacted on the back of windfall taxes, refinery shutdown, and lower product spreads. Even the petrochemical demand was subdued in the second quarter, and along with this, if you see, all these negatives were somewhat offset by the weaker rupee, which means that there were some currency tailwinds for Reliance Industries in the second quarter. Now, the retail segment is expected to grow on the back of monetization of newer stores and higher footfalls, while the exploration segment is expected to see some decline on the EBITDA front because of higher maintenance costs. Other than this, the key things to watch out for from Reliance Industries earnings would be the net debt levels and where the new investments are going in the retail and the new energy space. Along with this, what is the commentary that is coming in for the digital service business, and what is the capital expenditure outlay would be important to track from Reliance Industries earnings.
When you talk about windfall tax, there's a lot of chatter today. Would there be a rollback for the steel companies as well? All standing by for that. But Samit, we've talked about what we sometimes call to be the old economy business of Reliance, the new one, Reliance Jio, and everything related to it. What's the street expecting?
Well, Reliance Jio also expected to be a subdued set of numbers. The revenues are expected to be higher by around 5%. Margins are expected to come in at 50.7%, while the net profit is expected to be high by around 6.5%. The ARPU, that is a key number, will be high by only 2%, while there will be some good subscriber growth that we'll be seeing, and that is something that is going to aid the company's revenue and EBITDA growth in the second quarter of FY23. Now, we are seeing a strong subscriber growth because the company in a couple of quarters back had done a subscriber cleanup, and post that we have seen a sharp growth in the subscriber base, while ARPU growth will be largely on the back of new subscribers coming in and because of upgradation of the existing subscribers that we have seen in the network. However, the key to watch out for from Reliance Jio earnings would be management's commentary on how they are planning to monetize the 5G that they have just rolled out. Along with this, what is their commentary on ARPU trajectory and JioFiber, that is the broadband business, and what is their commentary on the capital expenditure outlay would be important to track from Reliance Jio earnings.
Jio numbers, we're expecting a decent growth there as well. And of course, for Reliance Industries, that's the expectation from that big heavyweight, sitting with a gain of around 0.3% as we speak. But the other heavy